Welcome to Standard Chartered's webinar, RMB in Motion, Strategic Implications for Corporate Treasury, Trade and Funding. I'm Karen Ng from Standard Chartered. I'll be the moderator for today. In the webinar today, we will discuss how corporates are adopting RMB in their treasury strategy, provide practical perspectives across trade, treasury, and capital markets, as well as offer outlook on RMB and adoption in the overall scheme of global finance. So together with me here are the panel speakers who will be sharing their insights later. Let me introduce Ms. Lillian Lim, Head of Global Subsidiaries, Greater China and North Asia at Standard Chartered. Mr. Stephen Chiu, China Corridor Banker for the UK and Europe. Mr. Anthony Lin, Head of Transaction Banking for Hong Kong and Greater China and North Asia. And last but not least, Mr. David Yim, our Head of Capital Markets for Greater China and North Asia. So you have a full team of Standard Chartered experts here with us. Thank you. I shall first begin with a summary of the key insights that we shared in the recently published inaugural RMBI reports. Let's recap on the macro insights. Now, if we look at the global trade perspective, China is a major trading partner. It comprises of 15% of global trade, almost 12.28% weighting in the IMF SDR basket. By GDP terms, it's 18.7 trillion US dollars and 6.1 trillion US dollars in good trade. It is by far the largest trading partner for more than 120 economies. And where do we see this going? We are seeing growth in both RMB trade settlements as well as the setup of offshore RMB centers. If you look at this slide, you realize not just from Asia, but across the world, there will be different designations of the locations carrying different functions and responsibility for RMB, no matter whether it is on FX Center, for example, in London, or developing a further financing angle through South Africa, Saudi Arabia, and most of all, Hong Kong being the largest offshore RMB center, of which almost $1 trillion of RMB deposits is resting with. We're also seeing other centers like Singapore picking up. More recently, Singapore also embarked on having additional banks as a clearing capacity further to the Chinese banks who are the RMB clearing banks. Further, we are also seeing growth in RMB settlements and offshore RMB centers supported by the expansion of RMB payment infrastructures. The rails are there. SIPS, as a settlement backbone of RMB internationalization, has been subject to very steep growth over the years by transaction. Just looking at the last year-on-year comparison, there was 43% growth in the last 12 months by transaction volume terms. And right now, over 124, actually the latest number is 126 countries are already connected with the SIPS network as of the latest in Q1 2026. Further to that, there's also identified structural gap between economic share as versus renminbi currency usage. By economic weight, we mentioned just now, China comprises 15% of global trade. However, right now, if you look at the SWIFT data on a standalone basis, renminbi as a currency usage of global payments only takes up 3.1%. Bear in mind that this is only a SWIFT view. Just now we mentioned about SIPS volume growth, which is not exactly captured in this number. So in a whole, in a nutshell, you will see more payment being used and via renminbi as a currency. Further to that, we're also seeing as more and more international trades require supply chain from China, there will be also an increased demand for renminbi as payment. So with that, the reserves, which currently holding at 1.9% in renminbi, also seems low. So in short, there is a gap between where we're seeing this renminbi usage could go. So where do these opportunities lie? From the key insights from our RMB report, we have engaged over 300 corporates across 19 sectors, and we engaged them on a survey to find out where they are in terms of renminbi exposure across their revenue, cost, and debt perspective. So corporates are telling us, right, they already have significant RMB exposure through operations, but it is not equally reflected in their corporate balance sheets. Renminbi now accounts for 23% of corporate revenues and 25% of costs, but only 14% by corporate debt. This indicates structural opportunity for treasury alignment. Linking with Stanchard's core strategy on cross-border connectivity and network, renminbi business amplifies such strengths. Across the business corridors, renminbi adoption vary across regions and reflects different levels of adoption and market maturity. For example, in Asia and ASEAN corporates, they often adopt RMB earlier due to supply chain integration. With China, European corporates tend to approach RMB through trade corridors and treasury centralization, while the Middle Eastern and African corporates adoption is often linked to commodities and infrastructure trades and settlement. So you can see the adoption will be based upon the different life cycle of usage of renminbi right now, and there is a lot of room for growth. In summary, renminbi exposure is already embedded in corporate operations. Corporate balance sheets have not fully aligned with that exposure, and adoption patterns differ across regions depending on trade linkages and market maturity. These regional dynamics are very closely linked to China's role in global trade, as well as the development of cross-border financial corridors. Next, let us zoom in to the highlight for this session, and that is the panel discussion. We shall circle around the themes listed here for our discussion across when does RMB move from operational to strategic for our corporate clients? How about aligning treasury, trade, and funding in action? And also the future of RMB and corporate treasury. So as to the first part, when will RMB move from operational to strategic for corporates? I would like to point my first question to Lillian, who covers the global subsidiary corporates. Now, Lillian, many corporates already have China exposures through trade and supply chains. At what point does RMB become strategic treasury consideration rather than simply an operational currency? Lillian,
hey, thanks, Karen. Thank you. Good morning, good afternoon, good evening to our esteemed guests. So to answer your question, Karen, the evolution on the increase of RMB as an alternate currency really is about diversification and resilience for the longer run. It is also a matter of whether a material share of a corporate's revenues or costs is systematically denominated in RMB. Now, for many multinational, China is not peripheral, as we all know. It is a core pillar of both their supply chain and revenue generation. And China remains a very important sourcing and sales center. And in that regard, we have so many clients tell us that China is just too big to ignore. So, by having said that, I would say many MNCs now are operating on a China for China model, where they are manufacturing in China for China sales. And most of these domestic flows are already in RMB. As we also highlighted in the report, RMB exposure, both direct and indirect, is already embedded in corporate operations. However, treasury framework have lagged, therefore creating a structural opportunity for alignment. Now, in addition, RMB payment infrastructure, the capital market connectivity and offshore liquidity depth have matured in the last couple of years and have reached a scale that makes RMB integration operationally viable beyond just a payment and settlement currency. Now, we're also seeing that there are increasing ways to handle your RMB exposure, whether it's through tapping an onshore China or offshore RMB FX market. Now, there was a recent removal back in March of 20% FX reserve requirement for onshore long FX CNY forward trades. Now, what this means is that previously this 20% reserve requirement represented a capital cost for banks, which we typically pass on to clients. Now, the removal of this eliminates this cost component, therefore enabling improved pricing for the forward and option contracts for hedging purposes. Lastly, I would just say that the benefits of using RMB in financing is also amplified as we now have in place offshore liquidity through the HKMA facility. Many of you may have heard of the HKMA RMB business facility, where there is a transparent interest reference rate used, the SHIBOR-based rate referencing onshore China mainland rates. This all makes RMB a more viable currency for Treasury. Thanks, Karen.
Thank you, Lillian. So I hear the China for China, that optionality about being able to access the onshore market where it's more optimal for the corporate to consider, as well as the latest liquidity measure that's all coming into play when it comes to presenting a sort of the strategic consideration for the treasurers. So that leads very well into the second part of this question, which I would direct to Stephen. So as I mentioned, StanChart has a very strong, network proposition. So from a corridor business perspective, where you're based in the UK and Europe, especially in Europe, where adoption is slightly different, as described with the ASEAN scenarios. Are you seeing the multinational corporate shifting approach in practice, and within which are the sectors are most relevant at the current stage? Thank you, Stephen.
Right. Thank you, Karen. I absolutely want to echo Karen and Lillian on the trend is that we are seeing more and more renminbi used by these European corporates. Because of one simple reason is because of the upgrade of the supply chain and the sector competitive of the Chinese market and Chinese supply chain. I want to take one very visible example is basically in the auto sectors, because in the past, as Lillian said, it's usually China for China, right? But now there's two shifting that I see from the auto sector is that manufacturing in China and then ship globally. Or in the very recent chances that we're seeing another European auto name that they work together with a leading EV brand in China. And then this EV brand, when exported to Europe, is using the network of the European auto name. So basically that means not only the manufacturer bit is in China, but from the very beginning of the proposition of the supply chain is targeting Europe market. So we are seeing a much, much bigger supply chain and cash flow between China and Europe because of this. In the past, it's China for China market. Now it's China for global and China for Europe. And we are seeing this is very visible. From the other angle, because I manage also the China to Europe corridor, I think that's even more visible that the use of renminbi is strategy important for the corporate. Because in the past, what the Chinese corporate they will do is that they manufacture in China and then ship the product to Europe. But now we are talking about the going overseas 3.0, where they need to localize, set a factory, bring the whole supply chain from China to Europe, and that involves lots of renminbi in terms of capex, trade, and supply chain. So I think that's very obvious from my perspective. Thank you.
Thank you. Thank you, Stephen. The point on China for Europe, I think that's a becoming an apparent trend, especially spearheaded by the auto sector via the EV, no matter through the EV vehicles or for the battery as well. So I think that is a very encouraging perspective to note that will bring in substantial cross-border flow on RMB with that outlook. Thank you. So moving on. I would like to focus on, the treasury alignment, trading and funding perspectives, right? So I would like to point this question to David now. Our report shows many corporates have greater RMB exposures through revenue and costs than through funding. How should treasurer think about aligning such balance sheet with this reality? David?
Thank you, Karen. So if I can just share some data with the audience here that the dim sum bond market has grown significantly in the past 5 years. So 2021, we're seeing 225 billion bonds issued. 2023, 629, and 2025, 769. So definitely a lot more bonds issued in renminbi, simply because there's people see the value and see the attractiveness in the renminbi financing. And this is of course is only just dim sum, which is the offshore renminbi bond issuance. And the reason for that is in different ways that issuers look at renminbi costs. We're definitely seeing a lot more issuer looking at renminbi financing, not just from on an after swap basis. What I mean by that is that in the past, a lot of issuer looking at the renminbi bond financing, comparing to home market currency, whether it's US dollar or euro. If there's any saving or arbitrage, then opportunistically they will tap the renminbi bonds. But starting maybe about 18 months ago, we're seeing a few more international issuers looking at the renminbi bond issuance because they have a natural needs in renminbi. In other words, they don't need the cross-currency swap rate to work to monitor the market, because they can use the bond proceeds, which is denominated in renminbi, for procurement, for their investment in China, for other reasons. I think that's the key reason why the growth of international issuers looking at the renminbi as the funding currencies. And of course, the renminbi compared to US dollar or euro or other currency, the absolute rate is lower. So naturally, for a lot of corporate treasurer, if they need renminbi funding, and they are of the view that renminbi also may be lower for longer, then it makes sense to do some research, do some analysis, and put renminbi as one of the funding currencies in their financial planning. And we're definitely seeing a lot more of that.
Thanks, David. On the point that you make, more international companies are issuing dim sum, for example. Could you give a few examples? Also give some perspective of what sort of tenor are they issuing in this space? And further to that, if you would, because that sometimes corporates will come to us and say, so how should I choose between Panda and dim sum? We also see an influx of issuers in Q1 for Panda issuances. Your perspective would be really helpful here for our treasurers. Thank you.
Yeah, thank you. It is always a tricky question to choose which market. So typically, a lot of treasurer, if they have a lot of investment in China or but they have the funding needs in renminbi, they look at these two main markets, whether it's a Panda, which is the onshore renminbi market, or dim sum, which is the offshore renminbi markets. There are, of course, different features in different markets. Typically, how we see how treasurer choose which market depends on the timing of the transactions required, the ease of execution, the ease of documentation preparation, the ease of using the international ratings, which a lot of corporates already have, and tenor and pricing. So what I mean by that is that if you're a typical frequent issuer in the international bond markets, you don't have to do too much to get yourself ready to issue in the dim sum bond market, because it's like other RECS bond markets that you can use our existing international rating. You can use the documents that you already have in issuing in other currencies, and you just need to do some marketing, maybe in Hong Kong, just to make sure that the dim sum bond market investor know your credit. If they're not already your invested in other currencies. So I think this is like very typical that the speed of execution is a lot quicker in dim sum. Whereas in Panda, you have to go through a new regulatory approval process. It could be a couple of months for the first time issuer, and you need the document to be prepared completely new in Chinese, and mostly it will also need a local ratings for that issuance. But of course, the Panda market is the biggest because the pool of the renminbi onshore market is the biggest. So laterally, so once everything is in place, after you've done the necessary marketing work, that the cost of bond issuance could be the lowest. So this is like a trade-off. So if you want to do a renminbi bond issuance quick, very easy to use existing document, maybe the dim sum is an easy option. Whereas if you want to tap the biggest pool, investor pool of the world, then of course the onshore will be your choice, and naturally probably will give you the lowest pricing possible. So that's always a trade-off. So if you have the time to go through the regulatory approval process, and you are looking at long term and continue using this the deepest pool, then Panda may be the option. But whereas if you are more opportunistic, then dim sum. But in the past year or so, there's another consideration, which is because of the investor demand naturally for renminbi is also increased, be it for diversification of assets, be it that more investors are looking to invest in renminbi. So that has also increased the size of demand in dim sum. So it's not just the typical banks. We're also getting a lot of interest from asset manager, fund manager, even insurance company buying dim sum. So the pool of liquidity in the dim sum market has also increased so much, and also the tenor. So other than just the typical 3 and 5 years, we also see a lot of issuance in 10 years and 20 years and even 30 years. The diverse pool of investor in the dim sum market also now become another funding consideration for potential renminbi the bond issuers, because in the dim sum market is now offer the size and also the depth and also tenors that are available to most issuers, whereas in the Panda market is typically still more on the shorter end, maybe 3 and 5 year. 10 is already rare and only maybe available for frequent issuers. So the recent increase of the pool of dim sum and also the tenor consideration, also there's another consideration for a lot of treasurer to pick one maybe over the others.
Thank you, David. That's a very detailed sharing from a capital market perspective. So moving on to the transactional banking perspective. So Anthony, from a trade and cash perspective, how are you seeing corporates adopting RMB, and how broad is the implication?
Yeah, thanks, Karen. And good morning, good afternoon, everyone. Great to connect with all of you. So I think in the past 20-something minutes, right, a lot have been covered. I think one very obvious message is RMB seems to become an integral part of a global trade. I think it's become an integral part of a lot of our clients who are online. in your day-to-day operations. I think David very clearly elaborate in the debt capital market fund, and I think we see very similar kind of development even on the day-to-day flow business perspective. I think the adoption is across all different sectors, different geographies. So maybe I just try to share a few examples. Now, one sector that is very obvious is commodities and energy. I think it is true. The underlying pricing of commodities of the energies are still, referencing global benchmarks. However, you also see a very obvious trend that more and more settlement of all these energy and commodities are settled in renminbi. I think this is a very big flow. We know how big the commodities and energy sector. So, and I think supply chain, Lillian, Stephen, they all mentioned. I think no matter it is China for China, China for Europe, China for Asia, right? At the end of the day, is supply chain, is the manufacturing supply chain. China will continue. It is very clear China will continue to put a lot of investment in the manufacturing sector. So, I mean, a very typical example, right? If you're an MNC, today we do have a lot of multinational clients. They have a global operation, of course, but they also have a very big China operation. They do a lot of sales. They collect a lot of renminbi from the China business operation, but at the same time, they do a lot of procurement from China to support the global operation. Now, this is a very typical flow. They will do the procurement invoicing in renminbi, and then they will settle those procurement with the renminbi they receive onshore. The rationale is very clear, right? This is a natural hedge to avoid FX volatilities, and I think this is something very fundamental, no difference from I think many of you are managing your existing currency exposure. It's just renminbi, the share, it continue to grow up. Now, funding costs, David mentioned about the potentially interest benefit between onshore offshore. Actually, I think this is applicable across all kind of financing tools and instruments. And I think in the last 2 years, it is very clear renminbi interest rate is significantly lower than other major currency. And we see our clients are very, very smart and agile. Many of them are switching some of the financing into renminbi to enjoy the lower funding. And one thing I want to highlight, I think the development of Hong Kong and also partly Singapore, we have the infrastructure that enable client to move between the onshore and offshore market to optimize the interest rate that they have. Because even no matter, although renminbi is significantly lower than US dollar, for example, in terms of interest rate, but actually there's always a differential between the onshore renminbi rate and the offshore renminbi rate. So I think for those clients that have the right infrastructure in place, they are able to leverage a bank like Standard Chartered to really get the best deal that is available in the market. So again, there's a very clear economic incentive behind adopting renminbi financing, and they use all kind of tools that we used to have for different currency, be it letter of credit, be it a trade loan that we have, short-term working capital loan. Basically, we just enable all these existing product for renminbi to benefit our client. So I think all in all, renminbi today is no longer an exotic currency in our view, right? From a trade perspective, it's already a very important utility or a functional currency. And more importantly, the driver behind the adoption is the economics value through adoption of renminbi. Now, obviously, your counterparties, if you have a big trade with China, you also see a bit of I won't call it pressure, but the demand from your counterparties that they want to have some of the trade in renminbi, and they may provide you a bit of incentive by moving along that direction. So I think all these are commercial benefit that are driving our clients to adopt renminbi in the last couple of years. So Karen, back to you.
Thank you, Anthony. To echo your point, I think if you look at the SWIFT data for RMB tracker on global trade finance currency, the renminbi already overtaken euro to become the second largest. So now it stands above 8% overall. Certainly, it's still behind USD being the dominant currency. However, that steep growth, it had grown 3 times over the last 4 years, for example. I think that is a very, very significant indicator of where, the corporates are heading, because definitely the economic benefit outweighs, the perspective where they would need to consider RMB into the core of their business. So that
Karen,
point,
I think
yes.
maybe I just to echo what you just said. We have done some internal research. We are very bullish on the growth of renminbi from a deposit or trade finance as a perspective. We do believe it will continue to grow at a double-digit CAGR for the next at least 5-10 years. So it's a very simple math. You already have some flow in renminbi. That flow will continue to grow at a CAGR of a double digit. It is not that difficult to realize that, actually, that will become a very, very significant portfolio just in the next 5 years' time. And so maybe this is the reason that we have this webinar today. We want to help all of you to prepare or to be part of this journey and start early.
Definitely, I echo you on that as well, Anthony. So going back to the multinationals, Lillian, do you see what the multinational treasurers are adopting right now? What are the key considerations? So do you see any challenges right now in terms of the platforms or infrastructures where there would be, opportunities to develop further?
No, thanks, Karen. Firstly, I think I would echo everything that Anthony said. We do see significantly more interest from multinationals to start looking at RMB as an alternate re-invoicing or payment currency, especially where they have Chinese suppliers that they procure from. Now, on your question on what are the hurdles of roadblocks, I would say there are a few, everything ranging from internal policy. Now, a lot of our multinationals, be it American multinationals or Europeans, have used either US dollar or Euro as their standardized payment currency. So to switch to RMB would be a non-standard payment currency. So we do see that as a hurdle in terms of internal policy. There is also what we see as in the internal ERP systems, the ability of the ERP system to handle RMB is also something that's impeding the progress. This will require IT development because RMB as an alternate currency is not yet embedded in their ERP system. And I would say at the end of the day, for MNCs, the commercial reason to use RMB as the payment currency will be first and foremost. And that really depends on whether companies have a natural hedge in order to adopt the usage of RMB. Yeah.
Right. So I gather that you are referring to that despite there would be certain imminent roadblocks, but where the opportunity or the benefit outweighs in terms of the economic benefit, economic benefit outweighs what needs to be done internally. You see that trend that the multinationals would gradually be picking up and using more of that currency, given what Anthony just shared, right? Because of that becoming more core, becoming a major consideration in the portfolio of a multi-currency platform, right?
Absolutely. So we are seeing a lot more requests for RFPs, or RFIs from multinationals that are looking specifically at the RMB capabilities and exactly the reason why they want to switch and asking banks to help them in trying to assess the cost and benefits of doing so.
I see. Thank you. I just want to also echo one point, because all in all, apart from the financing angle, the liquidity angle is also very core. I think apart from Hong Kong being the largest offshore liquidity center, Singapore being, the next. Majority of liquidity would be rested within, say, offshore centers such as Hong Kong and Singapore. While we are seeing in the network where clients would require RMB funding, in the past it would be very, very swap-based driven. So if the swap prices are not really for their proposition, it may be a bit more too expensive to adopt. However, we're seeing, especially from a policy-driven perspective, the Hong Kong Monetary Authority, together with the People's Bank of China, this year, actually end of last year, had launched the Renminbi Business Facility, while for Hong Kong, there will be liquidity unleashed from the onshore using a SHIBOR base, very transparent rate that is being adopted as the basis of cost of fund, and that could be unleashed and provided and channeled through to Hong Kong via Hong Kong Monetary Authority currency swap arrangement with the central bank in China, which means that liquidity lends in Hong Kong, we can either, as a bank, we will support our corporate clients with underlying real needs in RMB payments to draw on those facilities. At the same time, we'll also be able to radiate that facility, i.e. give that facility and liquidity to the network locations by intragroup arrangement. So that would cover trade finance perspective as well as working capital and capex. As long as there is underlying RMB business within the corporate, they will be in scope and relevant. So I think this also adds to, the consideration, because as Lillian, you pointed out, it's much more transparent now. As to, in the past where they may not be as clear as to, what exactly the sort of funding cost base would be. So I think that adds to what, Anthony and Lillian, you just described, that liquidity will also give the impetus to more adoption in terms of financing angle. Okay, so going to the next question, how about the future and outlook? Anthony alluded to the CAGR for the next 5-10 years, but I would also like to, ask for some thoughts. What will the next phase of adoption look like? What are some of the infrastructures, for example, in payment connectivity, settlement, rails, and cross-border interoperability would imply on, say, the transactional banking business, Anthony?
Yeah, thanks, Karen. Of course, to enable such a significant growth of renminbi flow, right? We see significant investment and development in the infrastructure. Like the development of SIPs, which now you in your report you say 124, but then in 2 months' time, then it's 126. I think this SIPs network expansion is amazing, and I think this is very critical, because without a very strong platform like SIPs, right, then your operation of renminbi will not be efficient, and we see SIPs continue to expand the network very, very very quickly, and I think we are a very, very strong partner with them. We are the first foreign bank to become a direct participant of SIPs, and so I think we are helping them to continue to expand. But just besides, when we are very excited about SIPs can offer a 24 times 5 kind of settlement, which you will not get that from the traditional kind of a payment platform. You have all kind of time you have to deal with. Then on top of SIPs, you have the evolution of mBridge. For example, this is true 724 platform. You move money, like this, and I have to say we see explosive growth in the mBridge world. I cannot disclose the specific data, right? Now Karen can share the SIP data, but when I look at mBridge, the volume in terms of transaction and value is explosive. That means it's even much higher than what Karen showed in the SIPs one. And I think these are all emerging. And I think these are the different world that you keep develop, and you can imagine through all this technology in the future, you will have much better interoperability And all these tied together with the development of capital market that we just share, with the development of our client becoming more used to adoption of different available tools that is available in the market to support RMB business. You can see these all come hand in hand, actually supporting the growth of a much, much better ecosystem. And I think some of this infrastructure is also important because when you are managing renminbi, or if renminbi become a very big part of your portfolio, then the way you manage liquidity probably need to adjust a little bit. I will give you an example. We have a very, very big European client. They obviously have their global pooling treasury management operation. They have to take out the RMB, carve it out, and then they make that RMB pool in Hong Kong. Why is that? Because you need a market that can handle RMB very efficiently, like the payment infrastructure I mentioned. You're more aligned with the holiday kind of arrangement in mainland China. You have deeper liquidity. Now, so this is quite different from you just managing your G2 currency today. So I think that is the direction, and we know it require a bit of work for our client to enable themselves in all this space. But there's also a very obvious trend, and this trend is supported by the infrastructure. But at the same time, our client also need to start to adopt some of the new kind of area of focus derived from the RMB trend as well.
Agree, Anthony. Before I move to Stephen to share from a European market perspective, I want to also comment that you just mentioned about SIPs. You also mentioned about Enbridge with that explosive growth angle. Just putting all these side by side, no matter it's Swift, SIPs, or Enbridge, these are all existing rails for our clients to choose. So, suddenly we come together to provide all these optionality to enable our treasurers to more actively engage and manage their position in RMB more effectively. So also echoing to, not only for transactional banking perspective, but also as the market develop and deepen, there is increased efficiency in also managing the FX and credit risk, right, for example. So that could be, the ecosystem, if you look at it this way, bit by bit, it's getting improved and close out. The gaps are closing out. So I think with that expanded ecosystem, that will just encourage and re-encourage more of our corporates to be using and tapping into the benefit and the efficiency of this ecosystem. So I think this is something quite substantial development that we can see as a whole from the network and the clients that we deal with. So now I back to Stephen. What developments do you think could matter most for corporates, especially from European angle? Anthony mentioned about, the holidays would also matter. The sort of, can we, take out that RMB proportion just to manage it to the optimal perspective? What is your view?
So I think I'll probably just take the comparison of renminbi and US dollars, because I think I'm sitting in London, right? I think everyone is aware that London is a international financing hub for US dollar. So I think the concept of London dollar or Europe dollar is so obvious, and then the depth and access of US dollar for European corporates and UK corporates and everyone outside US is very, very determination of how US dollar is applied to everyday life, right? I think in the same concept, I think from my perspective, it's very important to see how we together helping London and Europe to grow their renminbi capabilities. One in the next 5 or 10 years, if we have something similar like the US dollar in London, and by the way, I think we are probably being just awarded by as a award that being one of the best renminbi bank in UK. So this is the concept that we need to continue building up in London and outside Asia, where people are very confident and relaxed about the depth and access of renminbi fundings and resources and liquidity in a different time zone. I think this will really helpful in terms of helping the treasury in the European corporates and financing institution in their strategy decision, because eventually the cost of funding and everything, they are just one side of the story. But for day-to-day usage, if we can have a outside Asia type of renminbi pool in for example in London, I think Karen, you have been putting a lot of effort to building that, right? I think eventually in the next 5-10 years, if we can see something similar happen in London, I think that will greatly enhance the renminbi in terms of the volume and the importance.
Thank you, Stephen. Definitely, this is our objective to also help build the ecosystem for RMB development in the network. So moving on to the closing section, the question will be for all of you, the four of you. Before we look at some of the Q&As in the chat box, which actually we're ready to address two of them, could you give one piece of advice to our corporate treasurer thinking about using RMB today, assuming that they really have not been actively approaching this opportunity before? What would it be? Can I ask Lillian to give us that piece of advice first? Thank you.
Thanks, Karen. Well, my piece of advice for treasurers would be quantify, do the homework and try and quantify the benefits of switching to RMB from a commercial perspective. I think that would be I would suggest that as a starting point. Thank you.
Yeah, I think not until you do that, you probably find something, the statistics, the data is probably showing some very meaningful messages, right? I think that's how we feel when we talk to some of our clients, not just the multinationals, but also even for the Chinese corporates, that proportion, that exposures that they have in the business in RMB could be very substantial. And a lot of times as we talk to our clients, the RMB angle opens doors because this is our area of expertise, and the sharing of what other clients are doing is also very interesting to other clients usually. So we will also take that on board with our clients in the discussion. Thank you, Lillian. I will invite David to give us a 1 or 2 minute sharing on this perspective. Thank you.
Sure. I think I hope the corporate treasurers on the phone are now convinced that they should spend some time looking at the RMB as one of the funding option. So whether it's for cost or investor diversification, do not worry about marketing work or all this, because I think there are natural demand for the RMB assets. So I think in the dim sum market in particular, because then RMB versus US dollar is also like appreciating a little bit. So laterally, they actually are a fair number of investors who are actually quite keen to get their hands on some RMB assets, and there are not that many out there. So the investor pool is worth the effort to study a little bit and then to do the little bit of marketing work and to enjoy this low yield funding maybe for years to come. So I'm sure that effort is worthwhile.
Thank you. And exactly why we have been seeing some European issuers, corporate issuers coming into the market, for example, Nestle, right, into the dim sum bond market recently. Thank you. Anthony, to you.
Very quick one. I think RMB used to be an exotic currency in our book. Is a risk that you have to manage, a risk that you have to minimize. I think the landscape had changed. RMB actually present opportunities now. I think understanding the evolution of RMB, and also I think if you somehow your business is connected to RMB, I'm afraid you cannot resist or you cannot stop the trend of more of your trade will be in renminbi. It's just a natural evolution of that. So seize these opportunities by leveraging of the infrastructure that keep building, have a good partner that can also share with you the experience. I think that probably will be something very helpful. It's an opportunity, not just there's risk to manage, but there's also some very good opportunities to capture.
Thank you. And Stephen?
I think my funny way of saying is that today it's a tube strike in London. So I will use the famous saying in the TFL that see it, say it, sort it, right? I think the major concept that I want to give everyone is that you see the trend, you say to your bankers and sort it out. I think this is my takeaway. I think as long as you see the trend, talk to your bankers, have download, and then eventually you will solve the problem. I think the starting point is the most important thing. Thanks.
Thank you. This is a very heavy-weighted 2 cents from you. Thank you. Okay, so if I quickly look at the Q&A, all right. Okay, I think it's very, very straightforward answer to the first question in the chat box. The question is RMB only relevant for companies with operations in China? I think, all our participants can answer this question by now, because the answer is no, because there would be a lot of cross-border applications, as we explained throughout. So talk to us. We are the partner for you to engage and to explore and to charter your way through in this journey. So this is very important message that's shared by my panelist, fellow panelist just now.
Karen, on this point,
yes.
maybe I can share a real life example.
Sure, please.
We got an inquiry on no-name basis. We have a big Japanese conglomerate dealing with a UAE, not UAE, it's UAE company, and they come to us to facilitate the trade in renminbi. So I think these are some very interesting story. You see, if this trend continue, like what I said, right, this will become just a very integral part of your day-to-day operation. No matter you are physically or not physically present in China, somehow you will link to renminbi one way or the other.
Thanks. That's a very good example. So again, it's an illustration that the renminbi ecosystem is built entirely in the network, may not have a direct operation in China. So moving on to another question, which perhaps I will take it, because there will be some, somehow during the journey of Renminbi internationalization discussion, there would be some potential misconceptions about RMB, because sometimes, our clients may be a little confused about CNY, CNH, and then when it comes to a payment currency and clearing currency versus a FX currency, right? So I think, Anthony, you can also help me on this, but in terms of looking into how come there's a CNH denomination and also CNY, that is coming from the angle of an FX spot and hedging perspective. So there are two curves because of the exchange control. There are still independent market in terms of FX. So the ones onshore will be CNY and the offshore market will be CNH, right? USD CNH. In the USD CNH perspective, it's freely tradable. So whatever we do, it's just like any other currency. However, if you come to Anthony's expertise when we talk about clearing, when you talk about payment via SWIFT, the currency code, there is only one currency code across everything. It's only CNY. So sometimes, people may get a bit confused. So, why are we seeing, two denominations? However, CNH equals CNY. So one CNH equals one CNY on an FX perspective. It's just that there are two different curves for that FX market. When it comes to clearing, there's only one single CNY code in the payment system. So I don't know if it's a clear enough answer to a very commonly asked question, but this is we always also explain that in our frequent amplification through LinkedIn in our RMB 101, because we just want to ensure the market development perspective also carry some of the basic, levels of understanding to ensure there is comfort that is, kept within our clients on this perspective. Okay. I do not think there will be any other questions because we already addressed, give out some perspective, etc. So perhaps I'll use just 2 minutes to wrap up. But before that, any other final comments from our panelists here?
No, we maybe just go first. Thank you for everyone for joining us today. I think this is a topic that is very, very close to Standard Chartered. We are very committed to this topic, and I think we also see our clients benefiting from all the development. We just want to bring this expertise and experience to every one of you. So yeah, thank you, Karen, for setting this up.
Thank you. Thank you. So with that, I will just wrap up in 2 minutes. So as our panelists have alluded to, we're seeing the benefits are already tangible. The development is here to stay. We will only see more. So let's better get ready. So if you're talking about the ease of access, the readiness, you can see through there is greater payment resilience through the alternative payment rails, for example, or settlement rails. We described it just now. There would be parallel optionality that you can adopt to your perspective to benefit your business. In terms of funding and working capital advantage, especially for the China-linked sectors, there is very significant supply chain related opportunities that you can extract with your partners in the supply chain. From capital markets diversification and the deepening of onshore and offshore RMB liquidity, not only that you will be able to get transparency in the basis of the funding, but also access to a much broader and much diverse group of investors, as David alluded to. Further to that, in terms of the continuing development of the market, you will see more effective liquidity and FX management tools, which will align with your currency, and that is supported by underlying cash flows in RMB. And last but not least, we are all here to help you build a future-ready platform to embrace this opportunity where you can extract the benefit from your company's perspective. So with this, I would like to thank all my panelists for this very fruitful sharing. Again, do reach out to us for any further discussion. We are always here to support you. And without further ado, thank you very much, and we will see you next time.